Hey, how's it going guys? It is Olivier and today I'll share with you my full investing portfolio update for the month of August 2024. As always, after checking out at what are the different individual stocks that I hold in my portfolio, we'll be taking a look at what are the different ETFs that I have in it. Then we'll take a glance at what are the different sectors that are the most represented in my portfolio, and we'll finish by taking a look at what are the different transactions that I've made in the past month. First, when we jump right into the technology sector, we can find that I have 4 of the big GAFAM, so Apple, Meta, Google, and Amazon. And then you can find that I also hold Tesla in my portfolio that represents quite a certain portion of my total assets. Finally, the last technology company that I have is Rumble, which is a small direct competitor of YouTube. And so in total, we can see that on the average price that I've paid for these companies, I am up on pretty much every single one of these companies except for Rumble that is massively down of over 70%. But the good news for me is that it still represents a super small stake of my overall assets, which means that it doesn't impact a lot my overall portfolio performance. Then when we dive right into the energy sector, we can find that I have 2 of the big Canadian energy companies in the form of Enbridge and Pembina. In the case of Pembina, you can see that compared to the average price that I've paid for it, it has been tremendously performing with some return of close to 100%. And on the side, we can see that Enbridge hasn't been performing that greatly over the last couple of years, where it has returned only about 12.52% of unrealized profit. Because in fact, it is important for you to understand that I am talking about unrealized profit, so the potential profit or losses that I could have by selling this company. But unfortunately, you can see that in my total gain and losses, I haven't included all the dividend income that I have generated from these high dividend companies. Now in the financial sector, you can find that I only have 2 companies that still represent a certain portion of my total assets. First, we can see that I have one of the largest Canadian banks in the form of TD that hasn't been performing that greatly over the last couple of years and months. But on the upper hand, we can find that one of the largest insurance companies in the entire world, Manulife, has been doing fantastic with some return of close to 85%. Unfortunately, the picture isn't the same in the telecommunications sector, where we can find that I hold both Bell and Telus in that field. We can see that in both cases, when we are excluding the dividend that they are generating, they are performing horrendously bad, where we can see that they are both returning some negative losses. On the upper end, in the consummation field, you can see that Couche-Tard has been doing pretty well with some return of over 65% of unrealized profit. In terms of the materials company that I have in my portfolio, which is Savaria, you can find that over the last couple of weeks and months, it has been performing quite well, where it currently has some unrealized profit of over 43%. In the case of one of my other big possession, which is the real estate investment trust Raucan, representing over 6% of my total assets, you can find that even if the company is distributing over 6% of monthly dividend income to their shareholders, well, we can find that the company hasn't been moving that greatly in terms of its valuation over the last couple of weeks and months. But with the recent news of the rate cut from the BOC and some potential rate cuts that will continue to float in the next couple of quarters, this could have some pretty positive impact on the total valuation of the real estate market as a whole in Canada. Finally, for the last stock in my portfolio, which is 5N+, you can see that it has been doing okay over the last couple of years despite some great positive momentum during the last couple of weeks and months. And now jumping out to the ETF section, we can find that one of the largest ETF that I have in my portfolio by far is the Vanguard S&P 500 Index ETF. By itself, this fund that seeks to track the performance of the 500 largest American companies by valuation, worth over 15% of my total assets. And compared to the average price that I've paid for this ETF, you can find that I have some potential unrealized profit of over 31% at the moment. Now for the second ETF on my list, in which I will continue to invest even more in the future, it is the iShares Core Equity ETF. This ETF is basically an all-in-one where it invests in all the different markets around the world. At the moment, the asset ponderation in this ETF is of less than 5%, but eventually I want to increase this number to at least 10% of my overall portfolio. And in total, compared to the average price that I've paid for, you can see that I'm only up by about 4%. Then in terms of the third ETF that I have in my list, you can see that it is the iShares S&P TSX ETF. This one is basically a tracker of the overall Canadian market, and it only represents about less than 3% of my assets, and it is up by about 6.67% of unrealized profit. The fourth ETF on my list is the Schwab US Dividend Equity ETF with the famous ticker SCHD. This one is basically an ETF investing in great and high quality dividend companies that are found on the US market. And on its side, you can see that compared to the average price that I've paid for, it is currently up by over 12%. The fifth ETF on my list is the Vanguard Dividend Appreciation ETF investing in great dividend growth companies. On its side, you can see that it has been performing quite well with some unrealized profit of over 24%. And finally, the last ETF on my list is basically my liquidity reserve, which is the cash ETF or the global high interest savings account ETF. Basically, it is an ETF that invests in multiple types of high yielding savings accounts. So it basically gives me some great interest income every single month. And at the moment, it only represents about 4% of my total assets. But eventually, just like for the iShares Core Equity ETF, I want to increase this ponderation to at least 10% of my overall portfolio. It is mainly because I want to continue to invest in great real estate projects, and I need to have great liquidity to support myself in these types of projects. So in total, you can find that my portfolio currently worth over $170,000 at the moment. And so this represents some unrealized profit of over $46,000 or close to 37%. And so eventually my two main objectives will be to rebalance my portfolio with more ETFs of great quality, such as the iShares Core Equity ETF. And I also want to reduce the position that I have in multiple of my single stock portfolio, for example, the TD Bank that represents a certain portion of my total assets. Here you have a better overview of my ETF portfolio, where you can see that I want to also have more exposure to the international market by adding eventually another international ETF to it. Nevertheless, one of my main objectives in the short term will be to add more liquidity into these types of ETFs that only represents about $52,000 of assets, but they still represent some unrealized profit of over $8,000 or close to 19%. In terms of the sectoral distribution, with no surprise, you can find that the technology sector and the ETFs are the two biggest sectors of my overall portfolio. After, we can find the financial sector, the energy sector, and the real estate sector that are also well represented in it. And then we'll have some smaller sector in my portfolio. For example, we have the consummation sector, the communication sector, as well as the materials sector. And finally, over the past month, you can see that I haven't made any big transactions except of buying a few shares of cash to add more liquidity to my portfolio. This comes from the fact that over the past couple of weeks and months, I have been mainly focusing on paying off as much of my mortgage as I could on my real estate property. And I've also been paying a few different expenses related to real estate, for example, the different municipal taxes, because over the next couple of years, my goal will be to refinance the portion of equity that I have built on my real estate project to buy even more doors. And so on your side, if you want to discover how I've been able to buy my first triplex at age 24 with no background in the real estate market, well, check out the video that's gonna be right over here, and I will see you soon. Peace!